All right, good morning, everybody. So now we're joined by Commodity Research Group's Andy Lebow. Andy's been taking us through the energy numbers the past few weeks. Always has the great data, great information on what's just been released. So Andy, tell me what you saw in the data.
Okay, thanks for having me on again, Michael. I thought this was pretty much a mixed bag. Crude stocks drawing by 4.3 million barrels relative to market expectations of a draw of 2.4. I was looking for down 0.8, and a lot of the variables came in around where what I was looking for, except for runs. Crude runs continue to be much stronger than what I had thought up and what the market was thinking. The market was thinking that crude runs would be down this week, and they were strong. And as a result, we had a larger than expected crude stock draw. And looking at the crude numbers, we're at 402 million barrels, 401.5. That's 23 days supply, two behind the 4-year average. Now, we had been saying over the last couple of weeks, Michael, that we were expecting a few more weeks of crude stock draws, and I think the stock draws are coming to a close here. Runs will go down because we're heading into turnarounds, and this or maybe next week we'll see another crude stock draw, and then they're going to start building. Cushing built this week. That's the third or fourth week in a row for Cushing, and that's going to start rebuilding. So crude's it was bullish here, but looking ahead for September to October, I think the numbers are going to show a different story. Now, because refiners are running so hard through their refineries, they're making too much gasoline and too much distillate. Gasoline built. We were looking actually for gasoline built by 1.8. We were looking for only a 300 draw. The market was looking for a million draw, and it came in at up 1.8. For distillates, that was up 3.1. Way more than what the market had been looking for. And I think we had been saying the last couple of weeks that distillate was changing a little bit. We've seen now a 13 million barrel build over the last, since the end of June. And that is, distillate is beginning to look a little bit more bearish. At 32 days supply, though, it's still 6 behind the 4-year average. So, not ready to put distillate in the bear camp, but the flag waving a little bit, and we're making way too much distillate. Now that's going to change as we go into turnaround, but the fundamentals there have changed from really bullish to hey, let's take a different look at distillate.
So what do you think of, so crude oil initially on the figures we're trading about 68.50, knee-jerk initially we moved up to about 68.80, and now since we're trading $1 lower at 67.82. Do you think, it's a bit of a risk-off day in the equity markets? S&P's down 15, Nasdaq's down 100. So do you think oil is more of a product of the risk-off environment, or is it something in the data, a little of both?
I don't see anything in this data to really have, to really provide a major sell-off. I mean, they came in distillate maybe, but the energy markets don't really, the heart doesn't beat on the diesel market all the time in the energy. I think. WTI and Brent are clearly in a trading range, and it failed to really sustain itself, around new highs, and I think we're just dropping off here, and also maybe the market is beginning to look ahead at the weeks coming up, where we will start seeing some stock builds, and yeah. It is definitely a little bit part of the risk-off nature of the markets today.
Well, it's been an interesting range the past 2 months in crude. Just bringing it up here for everybody to see. But we've traded, mid last month we got down below $64, then had a sharp move up above 71, and here we are now. Actually, we just took a leg lower by a few more cents. We're trading at 67.70. So maybe it's also just part of the range. Really, since March, April range, we've been between 63, 64, up as high as 71, 72. So I guess just waiting for the next big catalyst, possibly.
That's exactly it, Michael. I mean, you just have to look at a chart and you see that we're clearly we're clearly in those ranges. And, what's happened, there's still a lot of uncertainty as to, the supply demand. You look at these balances and, they could shift a 500,000 barrels a day in either direction, based on what we think Iranian exports are going to be. And there was somewhat of a change with India. It looks like they're going to probably be taking more Iranian barrels than maybe what the market was thinking just a week or two ago. We're still going with we're still right around 1 million barrels a day off the market, and I think that's around where the market is, but certainly that could change. And we're also, I think the key thing for this market, at least on the supply side, is we're really depending on Nigeria and Libya to continue to produce at relatively high levels. Both of them are doing pretty well right now, and that has to sustain itself to keep the market from going into a fairly significant shortfall. As it looks right now, fourth quarter looks like we're going to be short by around 500,000 barrels a day, and that could worsen or improve, depending on what we get from Iran, Libya, Nigeria, Venezuela. So there's still a lot of uncertainty in this market, and hence, you're at a trading range, and I think what's also important is if you look at the demand numbers, they're pretty good. I mean, the market sold off during that hand-wringing period when all the markets sold off, risk off, and the end of the fears over the trade war. But you look at these oil apparent disappearance numbers. So far they've been good. That could change, obviously, but they're coming in. They're coming in good. Asia's coming in, pretty robust, and these U.S. numbers are good.
Great. Well, yeah, that's a lot of really good information. As we said, oil's now trading off about $1.08 following the data. Andy, thanks a lot for that great information. And for everybody, Andy's part of Commodity Research Group. We had Ed Meir, who's with Andy. He was on last week, gave a lot of great information on the macro market and metals, and Jim Colburn as well. I have not spoken to Jim yet. We're going to have him on hopefully very shortly. But they're a really great group, and they put together a great monthly report, which we posted on the research tab, on the insights tab in the commodity section. That just came out yesterday. So if you hadn't had a chance, please check that out. And, they've got great information there. So thanks for providing that, Andy and team.
Okay. Thank you, Michael.
All right. We'll talk to you soon. Thanks, Andy.
Okay. Thanks.